Okay, good afternoon, everybody. It's an absolute pleasure to be here at the Singapore FinTech Festival this afternoon. I'm Anthony Woolley from Ownera, joined today by Pete and Julio. We'll each introduce ourselves a bit more when we get into the session. Very happy to be here on the Linux Foundation Decentralized Trust stand. LF Decentralized Trust is the open source foundation for the decentralized technology ecosystem. Okay, so before we get into things, we're really excited to talk to you today about what Ownera and Adhara are doing together. Let's run a little short video to tell you what it's all about.
In today's financial landscape, digital cash and tokenized collateral are essential, but scalability is hindered by a lack of interoperability. Industry leaders Ownera and Adhara have joined forces to address this challenge. Adhara has been at the forefront of delivering digital cash solutions for both central bank and commercial bank money and deposit tokens, enabling a new digital cash settlement layer. Their expertise in visualizing and managing settlement liquidity across the new ecosystem will help drive scale. Ownera, a leader in tokenization interoperability, collaborates with some of the world's largest institutions to optimize digital asset use cases, such as intraday repo and collateral mobility. Their innovative in-P2P routing technology efficiently connects and orchestrates digital securities transactions across multiple platforms. This strategic alliance fosters smooth connectivity across digital platforms, enhancing liquidity management and mobilizing collateral, providing scalable solutions for banks out of the box. Adhara and Ownera are revolutionizing finance. Tomorrow starts now.
There you go. So we produced that short video when we announced the partnership between Adhara and Ownera recently. It's something we're really excited about. We think we're working on one of the biggest and most urgent problems in digital finance today, which is how do you actually update record of ownership instantly, exchange assets such as regulated securities with forms of digital cash. So to take things forward, let me bring in Julio, the CEO and co-founder of Adhara.
Thank you, Anthony. Hi, everybody. It's a pleasure to be here today. I'm the co-founder and CEO of Adhara. Adhara is a startup company that we launched 6 years ago. We manufacture digital cash solutions and tokenized cash solutions in different flavors, including deposit tokens and wholesale CBDCs, and also the tooling that the bank needs to connect into digital cash, digital assets in all this new tokenized world. Right? Today, we're going to be talking about decentralized FMIs. FMI stands for Financial Market Infrastructures. Those are the infrastructures where the capital markets work and get settled. And what we mean by decentralized FMIs are this new type of financial market infrastructure where things happen on a peer-to-peer basis, right? Instead of having like centralized operators. Centralized operators introduce central points of failure and make things work in batches. And decentralized FMIs are quite useful in the sense that they avoid the need for central operators and also tend to work on a 24/7 basis. The other big aspect about centralized FMIs is the ability to ensure atomicity of transactions. Whenever you have to do, for example, delivery versus payment of digital securities against digital cash, you can ensure that both parts are going to happen at the same time or they're not going to happen, right? So essentially atomicity in transactions. Those are the big two aspects of decentralized FMIs. Decentralized FMIs are created and implemented with decentralized technologies such as blockchain and other types of DLT. The industry is quite interested in these aspects, obviously, mainly because of the programmable aspects of this. So the idea of being able to access programmatically these processes and to ensure that they work automatically, and therefore not having to, avoiding the possibility of errors and the need for reconciliations and also what we call composability, which is exploiting this atomicity that we were mentioning before. Essentially, the idea of bundling different legs in a digital transaction, so all the different legs happen at the same time or don't happen at all. So those are quite important aspects that can derive a lot of benefits in the financial industry. And the challenges today to adopt this type of technologies, first of all, is the fragmentation, right? The idea of having to have many integrations into the different systems that are being created. So that is very costly for banks, and that drives the need for a single way to connect into these markets in a much more efficient way. And the other one is the incremental adoption and quite heterogeneous. There's been a lot of debate about what is the basic technology that should be underlying these solutions, and now we have a lot more clarity. And it's and the approach we're going to show you precisely addresses these challenges. So, without further ado, let's get more practical and let's see how we practically actually address these things. So I'm going to introduce Pete, who is also a co-founder and CEO of Adhara.
Hi everyone, it's good to be here. My name is Peter Munnings, and I've been with Adhara since the beginning. And we're going to be looking at some of the work that we've been doing with Ownera and to make this happen. Just before we start, good to mention that the work has expanded. So we've been working with Ownera initially, but also with Partior. And that's quite nice because we now have Ownera feeding in the execution plans from the DVP settlement. And we can tie that together with Partior, who can do multi-bank settlement. So that really starts to broaden the ecosystem. So Partior 24/7 payments platform allowing us to settle across multiple different banks. Adhara provides the deposit token solution for a particular bank, but also gives you insight into balances and the state of those transactions. And then Ownera providing the very innovative FinP2P protocol, allowing the execution of trades across multiple platforms to happen in a secure, optimal and secure way, and resilient as well. So 3 different companies, 3 different vendors, all working together to make sure that when a bank deploys the solution, they get out-of-the-box access to Partior, access to their deposit token solution, and access to the multiple securities platforms that Ownera is connecting into. We're going to look at 2 different use cases, so I'm going to hand back to Anthony to take us through the details of the DVP use case, and then I'll talk through the actual work that we did with them.
Thanks, Pete. Very good. So let's get into a little bit of what does Ownera do exactly, and how do we make true DVP delivery versus payment happen in this market. So Ownera, we connect the market for the world of tokenized assets. How do we do that? We provide software routers to those market participants. And in the regulated securities markets, there can be many parties in a securities transaction. So yes, we provide routers to the tokenization platforms, the blockchains, the digital payment rails. We also provide them to custodians and other service providers. So our routers, they have native adapters into all of the leading private and public blockchains. So we have native adapters into the digital asset Canton ecosystem, R3 Corda, Quorum, and the public chains, EVM-based chains, and others. And from those, we can distribute and orchestrate securities transactions. This solves really a big problem at the moment. We have in the world of tokenization, there's now lots of assets being tokenized. It's a challenge getting them to investors around the world. You can onboard assets and investors onto one particular venue, but it can only ever achieve so much scale. So with these routers, we can get assets to investors wherever they are and whatever blockchain they have been tokenized on. Okay, so DVP flow, how does this work? Well, our routers are basically doing 3 very important things. They are harmonizing, so all investors or users in this ecosystem have a harmonized user ID and wallet. We harmonize asset data across the assets and use cases. And as I said, we've got native adapters to harmonize what's coming from all of these diverse tokenization platforms. Second most important element is messaging. The ability to do asset discovery, so investors can actually find these tokenized assets to invest in. We handle the messaging then around the trade lifecycle, pre-trade and post-trade, because we're bringing all of that together here in one place, right, when you do a delivery versus payment transaction. Last but not least, and maybe the really clever bit, these routers orchestrate transactions. So they actually orchestrate the settlement of transactions. That can be different types of instant settlement. It can be fully automated electronic, or it can be done through regulatory escrows. But basically, all of this is managed by something we call an execution plan that manages the orchestration, and the routers are always in full agreement. They talk to one another and they manage that orchestration, the hold of assets in one chain, movement of money on another chain, release of the assets, and the most simple example. And that has to be done securely through strong proofs and with the agreement of all parties to the transaction that are involved in it. Okay, and here you can see this summarized. This is how things happen in our world. So you have an issuer on a tokenization platform, top left. They publish their assets to a buyer, top right. That buyer can see the assets, see the data around the assets, and then choose to review and then invest in the asset. When that investor clicks to invest, you can have a regulated custodian sign the transaction for the investor, and this technology integrates with many leading digital custody technology solutions. And then the routers orchestrate this DVP, ensuring that the record of ownership of the security is updated, the money is moved from the buyer to the seller, and either both happen or none of it happen. It's a secure exchange of asset and cash. Okay, so for the next piece, let me hand back to Pete.
So practically, how does this look in a flow? This is a flow that we put together, a fully functioning flow. So we have, as Anthony said, the trade is executed on a trade platform. That execution plan, so we'll show you what that looks like. The execution plan gets approved. That has to go out to all of the counterparties. They check to see that everything is correct as per their expectation based on the trade. They'll approve that execution plan. That then kicks off a payment obligation within DC Commander, and we can settle either on a deposit token solution or on Partior in this case. Well, we're showing Partior. The actual demo we're going to show is actually on a deposit token solution. So the obligation to settle is created. We update through the FinP2P network the execution plan, saying that this step is now done. The issuer then sees that the cash is cleared and ready to settle, and they will send through a request to settle. That request to settle comes back to DC Commander, which then settles on the cash side. The issuance process obviously is at that point where the securities are encumbered for issuance. FinP2P network is updated again, and the asset issuance to the beneficiary complete. So that's the actual process we're going to show you step by step. So let's have a look at it. And I'm going to click play. And so we kick it off. We're using Adhara's DC Commander and the Ownera router, and the issuance platform is plugged into the Ownera router, and we have a DC Commander adapter also plugged into an Ownera router. All right.
Okay. So what does this look like for the investor? So here's a typical user interface an investor might use. They want to invest in a tokenized money market fund. They can select their payment account, the amount of units they want to buy, and they click. Now, very shortly after that, there is an orchestration that takes a few seconds. Pete's going to take you through it. We slowed it down to take more like half a minute.
All right, so we can see the balances here on the deposit token solution for the red bank and for the blue bank. You can see they have no cash. They're the issuer. They're expected to receive money for their issuance. So see the notifications on DC Commander. So the first thing that happens that comes through to DC Commander, what's all the counterparties gets approved. This is just what's running in the background. You can see that the approval is complete. That then generates a payment obligation. So what you'll see in the deposit token is that the funds for that settlement are actually earmarked. So you can see the request for funding in progress. That effectively is waiting for the earmark to be created. You can see in the DC Commander obligations view, same view, the funding is in process and then it's funded. So that means that the money for settlement is now clear, is available. Can't be used for anything else. So it is there and it can't be used for anything else. So the pre-funding process is completed at this point. You can see we ran that on the 27th of September. And you can see in the balance view that money is now on hold and ready for settlement. We then notify the P2P network that the money is on hold and the issuance step happens. The securities are escrowed, comes back to say, please, can you now settle? And so settlement has actually already happened. There's a second one coming in here. But if you have a look at the transactions, you can see the hold of those funds was now executed and the money has moved. 1,000 came off the account. You can see the balance went down from a million to 999. And you can see now on the blue bank, the issuer, the money comes into their account. There it comes in, and that's done. And then I'm going to hand back to Anthony.
So all of those steps that Pete just took you through happen in a second or two. So this is the instant update, transfer of ownership of an asset and the payment with the digital money, and you get that green box saying the delivery has been achieved against that payment. Now, in the world of crypto, I think people are used to seeing this happening on-chain. In the world of traditional finance, this is quite exciting, right? This is now simplifying and getting beyond all of the complexity of the internals of a bank and synchronizing the instant transfer of ownership. Okay. Okay, so, and what are we applying this to? We can apply it to simple use cases. We just showed you an investor wanting to invest in a tokenized money market fund so he can get some yield on his investments. Maybe it was sitting in a stable coin that's not making any interest. You can invest in a tokenized money market fund and get some interest on it. But that works from those simple use cases all the way up to something more complex. And something more complex in the world of traditional finance is repo. So repo or repurchase transactions, there are billions of dollars of these done every day by, or trillions even, by major banks around the world. And it's banks wanting to instantly exchange collateral that they have for cash that they need. And banks exchange cash and collateral, would like to do that intraday, every day. Historically, this repo market has worked overnight through to a few days, lending and borrowing collateral and cash, because that really hasn't been the technology to move it very quickly intraday. That's what we have been working on, delivering jointly with Adhara. So I will let Pete take you through how all of that works.
You can think of this repo transaction as there's an opening leg and a closing leg. Each of them is a DVP, like we saw in the previous demo. The key difference with this, we're working with HQLX, which is High Quality Liquid Asset Exchange, which has collateral based on all the major tri-party platforms. And they create a digital collateral record, or a DCR, based off the collateral held in the underlying tri-party platform. So what they call the TTP accounts. So what happens is you have, once again, a buyer and a seller. They would do the trade typically on a trading platform like Eurex. That trade can be communicated through to HQLX via, you can see the Ownera routers over here. Then the Ownera router will communicate to the buyer to say you need to encumber the funds. The buyer will receive that through the Ownera router and the DC Commander adapter, goes into DC Commander. It earmarks the funds like we saw earlier, and it comes back and sends a proof of earmark back. Now, one of the things that we've changed a little bit in this case, because both HQLX and the deposit token solution support the earmarking of funds and the earmarking of the DCR, is we pre-clear or we pre-encumber all of the securities and all of the cash. And what we do is we embed into the Ownera receipt a more detailed proof. So it's a more secure proof. It's got details from the HQLX platform, and on this side it's got details from the deposit token blockchain network. We can also, as you can see here, we can use partial. There's a couple of different options we can use for settlement. The deposit token solution one gives you the ability to earmark the funds and send a proof, embed a proof of that earmarking into the FinP2P receipt that comes back to notify the securities platform that the cash is encumbered. Once the cash and the securities are both encumbered or earmarked, the execution plan then says execute. So there's an execution that happens first on the cash, and then the execution happens here on the securities. And so we guarantee an atomic settlement, so we take out all settlement risk. So not only do we have orchestration, but we can remove settlement risk, and the bank knows that if I have the cash, my securities have been transferred, and if I have the securities, my cash has been transferred. And all of this can happen in intraday. So that is, there's no platform in the world that is used widely for intraday repos. So you can open a repo at 9 if you are short sterling or dollars. As a seller of the repo, you get the dollars into your account, and then you close that repo at 2 p.m. once your dollar flows come in, and you get your securities back. So this works well. There's quite a lot of papers that have been written about this now, because it's a really nice solution actually, and it's planned to go into production. We're going through all the pre-production testing at the moment. Plan to go into production early next year. So that'll be the first time we'll do a cash for collateral repo in production using tokenized collateral and tokenized cash. So this one works amazingly well. All right, that's all from me. Do you want to hand back to you, Anthony?
Okay, there you go. So thanks for joining us today. We're pretty excited about the Adhara and Ownera partnership. We're at a stage now where Ownera's routers are now installed with some of the world's largest institutions. Adhara has their DC Commander, Digital Cash Commander, which can handle the wholesale payment legs installed in major institutions, and all of this is now going live. So if you found that interesting, we are recording this session. If you leave us your details, we can send you a recording. And I hope you have a good rest of the Singapore FinTech Festival. Bye for now.